Hello YouTube. Hope you guys are having a wonderful week. I'm having a good one, I can tell you that. Step Index doesn't disappoint these days. Oh man, Step Index is beautiful, man. It's gravitating to the levels that I spoke about previously with the video that I posted about a directional bias, how to formulate a trade bias. So I see that majority of traders are struggling with determining a bias. So in my commentaries, I try to at least cover that space because I don't see a lot of videos that go in depth as to what I went through with that particular video. But otherwise, in case that you missed it, I'm gonna give you a particular another perspective. Actually, I'm gonna give you another perspective of the very same things that I was speaking about in that particular video, and I'm gonna apply the very same narrative. I'm gonna apply the very same process that I use to look for high probability trade setups. Okay, so if you don't understand what I'm saying in this video, you need to go back into the previous commentaries so that you can have a better understanding of what I'm doing here, because what I'm showing you is applicable in the real world markets. I try by all means to make sure that you understand price action the way that I understand it. Alright, so if you guys are not familiar with ICT, I suggest that you get to it, because ICT is providing a lot of content and it's doing it for free. You know, it's doing it for free, no price to pay, nothing. Go learn from him, understand a few basics, and then come back to this channel. Then we'll have a meaningful conversation, you know. But otherwise, we're looking at a screenshot that I took today. I got home very late, so all of this price action that is happening here, right around where I have a trade position here, you can see it. I have a short somewhere here late in the PM session. So if you're looking at this chart the way that it is, would you say that this is looking like a bearish market tone? Well, it is if you're considering the opening of the day. So we opened right here and price was in a consolidation, and the reason why I always start in the beginning of the day, it is because in the beginning of the day there usually is a fair value gap just within few hours of the day. Exactly. So in the beginning of the day, that's what I'm looking for, a fair value gap. Now the fair value gap, we are on the 1 hour time frame, guys. These fair value gaps that occur in the 1 hour time frame, especially in few hours of the day, you will most likely have a fair value gap, and that fair value gap has a lot of magnitude in pulling in price or repelling it away. Okay, that's what it does. It's given two instructions: pull price towards it or repel from that particular key level. So we have this key level here. This is the very first fair value gap that we are seeing on the 11th August price action. So this is the fair value gap, guys, on an hourly time frame. All right, price rushes into the upside, and I think somewhere here is the 1 a.m. London opening. So London opens all the way down and comes back up to close here, and the following candlesticks, as you can see, they are a consolidation. They are marking time, but they eventually reach into the London fair value gap. That's what I call it since it's printed in London session, right? So that's the London new day opening fair value gap. So what is the characteristics of these fair value gaps? They are support and resistance. Okay, so here it is. It supports in this fair value gap. Where is it going? Well, if you look at these candlesticks, they have been compressed, as you can see. So there's a lot of buy side liquidity pool up here. So the market goes lower into a discount. They collect those orders where? In the new day fair value gap. And then they go higher. They take out the buy side liquidity, meaning that the positions that were opened in the London new day fair value gap, they close them just above the buy side liquidity, and they accumulate shorting opportunities. If you look at this wick right here, if you split that wick in half, you're gonna get quadrants, and the most powerful one there is the 50%. So this wick, you split it in half, price, if it's bearish, should respect this wick 50%, and it does right here. So that is the very first price signature that I saw when I looked at this particular step index chart, right? I saw that we have this wick that was respected, and price is drawing lower into the new day fair value gap, and look at what it does. It does not treat it as a support. What does it do? It breaks below it. Ding dong, market structure shift, right? And then it opens, trades even higher, and rebalances all of this candlestick here that was trading lower. It goes all the way up, almost near to the opening of that. And then what does it do? It closes near or just below the fair value gap here. Is that bullish or bearish? That is bearish, considering that we have a market structure shift, and this is where we are closing order flow. Okay, so this candlestick trades up just a little bit, and then it goes down. Now you have another market structure shift. So this candlestick also trades up into it, and what does it do? It resists. How many opportunities have you had after we've had the first market structure shift? You've had plenty of opportunities, right? So this fair value gap is really powerful, and you guys already know where price is going. I already gave the bias for this particular week. We are going lower into those consolidation lows, and oh my, price goes lower. So these fair value gaps, as I said, they pull price towards it. So we created this new sell side liquidity, which is near the lows of the day. So we create sell side liquidity, and then price retraces all the way up into the fair value gap, the new day fair value gap. So the characteristic of this fair value gap has already changed the moment we closed below the fair value gap. So it's no longer a support. We are now treating it as a resistance. Beautiful. So later in the day, this is when I came in. I took a screenshot of it because I was noticing that, hey man, we have resisted on that inversion fair value gap. We inverse it. Okay, so that's the first screenshot that I took, and then here I am in the 1 minute time frame. I took another screenshot because I was noticing that price action was going up into this particular buy side liquidity, right? And after it hit that buy side liquidity, it went lower, created a market structure shift, and I took out this fair value gap and I opened a shorting opportunity right here. So price action traded all the way up into the fair value gap low of our inverse on the 1 hour time frame, and it printed this fair value gap. Beautiful. So I went in with a short because I know that we don't want to get inside of that fair value gap, baby. We don't want that. Okay, this is telling us order flow that is bearish. So what does price action do afterwards? It meanders around, but eventually it goes lower and creates another market structure shift here. And in this candlestick right there, this is when I'm taking the screenshot. I'm saying here that price action is going to utilize this fair value gap to go lower. And it does. Beautiful, right? So this is when I took the last screenshot. Basically, the 1 hour time frame fair value gap was used as an inverse fair value gap to go lower and attack these sell side liquidity pools. And remember, the other day on the 9th of August, I did a bias video for you guys, how to formulate a trade bias. I gave you guys the direction for it. I said that it's going lower. Did you guys catch that? I gave it to you. So this is what I'm watching on StepDex on the 1 hour time frame. This is how far we've traded. We've went into the sell side liquidity. Yep, we are going lower. So we just tag this by this sell side liquidity, and this one is probably in the crosshairs. So that's what I'm looking out for in the next coming days. We've had our beautiful setup right here in this fair value gap. I spoke about it the other day. So price action is now responding and going lower. So if you guys were to look at the London fair value gap, as I said, it's in London. I did mention in that, right? Here it is, 1 a.m. That's when the fair value gap was created, right here. So what is price doing here? It's going up to take out the trailed stop losses. Remember, I had sold short the other day. So if price is coming lower like this, I would be trailing my stop loss, right? Right. So in the new day, what tends to happen in the beginning hours of the day, price action tends to go hunting for those stop losses. Exactly, that's what happened. And when a lot of people see that market structure shift here, they consider a breakout or they chase it going higher. So that's what happens, guys. And essentially the market is just going up here to take out some trail stop losses. So if I was essentially trading my stop loss in here and in here, and then I got stopped out, this is exactly how I would re-enter into my positions, by utilizing the very same fair value gap that was utilized to take me out. I am going to inverse that fair value gap to go short right here. Exactly that. That's how I would re-enter into my position. So I'm teaching you guys advanced price action right now. You probably your head, it hurts from digesting all of this price action, but essentially we're just looking for the sell side liquidity. And the reason why we are looking for the sell side liquidity is on the daily time frame. Okay, so our daily time frame, as I touched on it on that bias video, I said that the mid-month fair value gap is going to give us trouble. Okay, and yeah, we had seen Step Index having trouble on the daily time frame. So what is this now? Let's go into the daily time frame, right? This is it right here. And I'm gonna delete all of these levels since they have accomplished the mission. Right, I want to be left with the sell side liquidity pool here and the mid the contrarian fair value gap, which is right here. Since it is inefficient with the sell side delivery, as you can see, it's a big bullish candlestick. I would expect price action to come back and rebalance that green candlestick and make it mixed with black. Okay, that's what I am interested in. But essentially, how did I arrive at this bearish bias? It's simple. This guy here, the mid-month fair value gap. The mid-month fair value gap, as I said, it's powerful. I can give you loads and loads and loads of examples utilizing this fair value gap, but you'd have to look at it on your own, right? So that you can backtest this information. And if you want clarity, you can look at the last year's commentary so that you are able to understand this price action, man. If you want to understand it, go back into the previous commentaries. Until then, I will see you guys on the next video.